Hello, everyone. Welcome to the session today. We're excited to speak with you today. I have a special guest with us that's going to be talking a lot about taxes. If you've been on a few of these sessions before, then you know that we bring in different service providers. Lately, it's been a lot of Host Allies because they're a strong partner of ours and they have been working with many of our clients. We're also going to really dive into the tax topic. Before we do that, though, we're going to wait a little bit, just kind of let a few people take their time to log in. We can see people jumping in as we speak here. And so there is a recording for this session as well. We'll be sure to get that out after the call and it will be on our YouTube channel, but we'll just kind of give it a few minutes to let people load in and then we can get started. So thanks for attending and we have a lot of really good content here to go through today. I know it's kind of coming to the end of tax season, but I mean in general, you may have some experiences that you want to carry over into how you can do things better for next year, and that's kind of the purpose here is to help set things straight for moving forward with a lot more clarity and transparency around your taxes as you navigate through the the mess that is short-term rental accounting in general, because it is a very complex and unique type of vertical when it comes to taxes and financial management, and there's a lot of disconnected things and a lot of people that or a lot of systems that do things differently and no standardization. I think everyone kind of struggles with it, and clearing's been around now for about 4 years, really working towards helping make this a lot easier to handle and more efficient on your side, because we know that accounting and taxes are just one part of the operations, and I don't know many people that get into short-term rentals really desiring to spend a lot of time dealing with financials and accounting. So we'll give it another minute here and then we'll jump in and get started. But thanks for attending, and we look forward to the feedback at the end. There will be a survey at the end, so feel free to provide some feedback through that survey at the end. We also have a bit of a poll that we'll get going in a minute as well. But yeah, looking forward to diving into this topic. How are you doing today, Vishal?
I'm good and looking forward to this, Corey.
Yeah, great. Did you I'm sure you've been through getting through tax season this last little while with you and your team, and this is probably really relevant stuff for you.
This is definitely, these last 2 months are always one of the more interesting months of the year with all that goes on. So I think we have a lot to share here.
Awesome.
Um, do you want me to get into the next slide? You want
Yeah,
to?
I think now's a good time to get started. I see, at least 40% of the attendees have joined, and you get a lot of that where people will either pop in or are just waiting for the recording or registering and whatnot. We do have a lot of people that registers for these sessions, so looking forward to talking more about it. But yeah, if you haven't been here yet and this is your first session that you're attending, there is a YouTube channel, but really the goal of these sessions always really align around education. I mean, I think we try to we brought in I think four different vendors that we work with throughout the entire session kind of series, webinar series. But really with all of this, it's a lot of, I'm going to talk a little bit, but more so we want to be putting the right people in front of you that are the right experts in this space to kind of help you educate you a little bit on taxes, but also on all the different financial management concepts and trust accounting concepts. And so previous sessions have been on different topics. Today's is on taxes. And like I said, the goal is to really educate so that we can empower you really to do more with your time, because I think everyone in short-term rentals struggles with not having enough time when it comes down to it. I mean, there's so many different things going on from an operational perspective, and so we want to educate you, empower you, and also help you elevate your operations to be able to do things, in a more efficient way, so you can get some of that time back to focus maybe on the things that, matter more to you. Maybe that's, increasing your property count. Maybe that is, better guest experiences. But any time back that you get from having to do the financial management side of things can usually be used for a lot more impactful things, and the accounting becomes a bit more of a, less of a headache at the end of the month with the right systems in place. So if you want to jump to that next slide, I'll just I'll talk about it. I mean, we're near the end of the sessions now, so this is one of the last sessions that we're going to talk about, and then we'll do one more. I think there's a bit of a mishap here that I missed on my own side here, where it's not going to be April. Today's session's in April. It more likely will be May, June, but essentially it's just going to be another overview, kind of similar to the first one, but now so with all the different stuff that we've learned through all. I think there was like 10 or 12 different sessions throughout this. So if you haven't seen these ones, then definitely go to YouTube. There's a, nice searchable index where you can go through and kind of choose the topic that you want to look at. There's been topics like expense management. There's been, segments on, banking infrastructure, all these different types of concepts that, come into trust accounting as an umbrella. And we've talked through a lot of them. So our YouTube channel's there at Get Clearing. Feel free to go to that after this and dig through some of those. I send them out to a lot of people as well, so we do get quite good feedback on some of these. I mean, at the beginning when we're letting people come in and introducing ourselves, sometimes you can skip through some of that stuff and get to the core content. There's usually indicators on the actual time as well for where those start. So jumping on to that next slide. I'm just going to launch a poll here. These polls are really, impactful for us actually. So we really do appreciate when people do run the polls and actually give feedback for the polls because they help us really indicate, how we can improve on these in the future. After this webinar series, we're certainly going to have more webinars and have, new series and stuff like that. So your feedback through these polls and the surveys at the end can really help us inform how we're going to, produce more educational content in the future. This was one of our kind of first series that went through many different topics. So as we start to strategize around new webinars and new concepts, this is going to be where your impact can really help us, or your feedback can really help us create impact from an educational perspective. So thanks a lot for the participation in these. The poll, the survey, really helps us create better content for you. So thank you very much. Continuing on to that next slide. I do want to just start by making a couple introductions if you haven't met us before. A lot of people here probably have spoken to me through the demos. I'm one of the original kind of clearing members on the founding team of clearing. Basically, through the 4 years, I think I started before the go to market, and trust accounting was kind of this, necessary evil that people didn't really fully understand in the short-term rental space. I mean, there was understanding around trust accounting, but with all the complexity around the different structural components of the different types of, how the different OTAs pay out differently. There's no standardization. There's multiple different tech tools in the industry. We really put a lot of, effort into education and trying to build more of a standardized process around things. And so if you do work in clearing, you'll know that it is a very kind of a repeatable monthly process that's followed with the goal of creating more efficiency. But my background's always been in engineering and computer science, but then pivoted into more business development, sales, and working with startups. So it's been a fun journey, and I have learned a lot about it. I mean, before short-term rental trust accounting, I was working in the short-term rental property management space from a software perspective. So I worked at a software prior to this. That's one of the, common PMSs in the industry, and kind of pivoted into accounting, knowing that there was a bit of a gap here. So that's my background. I'll let Vishal kind of introduce himself and then jump into Host Allies and introduce Host Allies, and then we'll get deep into the content. So yeah, thanks.
Good morning and good afternoon, everyone, depending on where you're dialing in from. My name is Vishal. I'm the founder and CEO of Host Allies. Over the last decade, a little bit over a decade now, I've been very closely involved in short-term rental property management in actually various capacities. I started off as an investor, and I managed to grow a pretty decent sized portfolio of my own, and I was self-managing my own portfolio. And then as a property manager, and I started managing properties for other owners in my area. And then eventually, now as a provider of accounting and more importantly, financial management services and know-how and advice. And I'm really excited to be a part of this panel, where we're going to talk about this really important topic on tax clarity for short-term rental operators. So I can jump into, I wanted to do a quick introduction to Host Allies and the philosophy behind our genesis. As I mentioned in my intro, over the last decade or so, I've been in short-term rental property management in various capacities. And in these roles, I gained firsthand knowledge of the challenges we property managers face in managing our accounts and finances while we're trying to grow our own business. And there are two primary reasons for this. First of all, property managers have very important things to focus on, such as taking care of guests, managing the properties themselves, acquiring new owner clients to grow their inventory. With all that's going on, there's really not enough hours in the day to focus on back office tasks like bookkeeping and managing finances. Secondly, back office accounting and financial management can be really complex and time consuming, and it requires specialized skills and training. And that's the reason we built Host Allies, so that we can help property managers manage their back office so they can focus on the front office. This way, our clients can grow their business and we provide them with the tools and reporting to ensure they're doing it in the most profitable manner. As you can see on this slide, we go beyond bookkeeping. We actually help managers set up scalable accounting and financial management processes, everything from financial statements, owner statements, taxes, and we streamline everything from onboarding to financial reporting. We serve multiple boutique short-term rental firms with 10 to 150 properties and also select large franchises. And we have experience working with clients across pretty much every PMS platform that they're working on. And in today's webinar, we'll share some of those best practices, what we've learned, and share how you can build a one system with zero surprises around tax season. I'm really excited to get into that. Um, with that, I'll go hand off to Corey to talk about the session outline.
Yeah, absolutely. And I'll be quick here, but basically we do have a bit of an outline ahead of you, ahead of what's going to be in this session today. So, really, we're gonna start by talking about why tax season always feels so chaotic in the short-term rental space. I mean, in any business, really. I mean, tax season is a chaotic time. So, we'll talk about that, and then we'll go into who owns what and what's happening if something goes wrong. So, essentially, a lot of people struggle with understanding, what is my responsibility, what is the PMS's or the payment pros or the accounting software's responsibility or OTAs. Some of them, as you know, will remit taxes, some don't. What is a clean and clear operating system? So how can you build a structural operating system that allows you to have clean and clear transparency into your taxes? We'll talk about the tech and the expertise that help make these things work and how you can work with different, technologies or expertise to be able to help make this easier for yourself. We'll also talk about, lodging tax in general. I think it's a big topic when it comes to short-term rentals. There's lots of pitfalls and common mistakes we see often, and, obviously best practices as well for how to do that, a little bit more efficient. And then we'll talk and we'll really, highlight how a year-round operating kind of rhythm can really help you make tax time a lot easier and how you can prepare for that year-round kind of staying on top of things. And then I think Vishal has a couple case studies from some of his clients that he'll go into as well. Um, Before we do that, I'll just kind of give a little bit of an insight into, clearing and our accounting tech stack that's built for short-term rentals specifically. It's a very vertical solution. It's the only thing we focus on is the accounting for short-term rentals, which really helps us be able to go deep onto these concepts where oftentimes PMSs have more of like an all-in-one or one size fits all type approach. And when you have anything unique that you have to do, it can make it a little bit difficult. And then you have to go into spreadsheets to make, adjustments and whatnot. So clearing is, that all it's really that accounting tech stack that's purpose built for short-term rentals. It's really all we focus on. And so, um, talking about the topic in general, tax chaos, it really starts with bad financial infrastructure. At the end of the day, if you have disconnected systems that have zero standardization, different timings related to money being released, related to revenue recognition, these things can start to make you have to do different things for every single different channel that you're on. And that creates a lot of, chaos when it comes down to it. Often there's blurred lines between what's taxes collected, which is owner income, which is operator revenue, can lead to misreporting. If you don't know, who's remitted what and what taxes are what in my bulk payout that I'm getting with one line item that says tax, and I don't really know how that splits down into all the different taxes I have to pay, that can be a very challenging thing to kind of have to deal with manually. Um, a lot of people also, some people may know like Airbnb is remitting taxes, some PMSs even remit some taxes for you, but assuming that your OTAs will handle everything can be a bit of a challenge for people. A lot of people that are new to the industry don't really recognize that sometimes you do have to become that merchant of record and remit taxes on behalf of your owners. And then in other scenarios, Airbnb, for example, maybe you don't, but maybe you're in a scenario where Airbnb is not doing taxes correctly and they're only paying for one of the taxes, and that can, create gaps and really misfilings and basically create inaccuracies in all of your reporting. Um, a common thing that we kind of see as well is like commingling of funds. And I think we talked about that when it comes to like banking infrastructure and keeping your bank separated from a trust and operations perspective. And so often, taxes sitting in operating accounts can, be a mistake, but also can be something that creates chaos because you don't actually know which funds are related to the taxes, which ones are not. So that cash flow confusion can be a big one as well. There is disconnected systems, as I said. I think I said it 5 times because that's probably one of the biggest kind of challenges in this space is the disconnected systems, the zero standardization between anything. Long-term rentals have been around a lot longer, and there's a lot more standardization in the trust accounting ecosystem. When it comes to short-term rentals, basically nothing standardized. So it creates really no single source of truth, and it makes it difficult. And you're often jumping between spreadsheets, bank accounts, accounting systems, PMS, and that can just be challenging in nature. There's also no real visibility into or oftentimes people have limited visibility into what's, owned and what's already been remitted. And that's kind of going back to that Airbnb concept where like you might get this thing that says, hey, we've remitted this amount of taxes for you, but then like you might be in a jurisdiction or a municipality that also has a different tax that you also have to collect. And if you don't know that and Airbnb's already paid what they said they should pay, and you don't know that you actually have to remit a little bit more, that can lead to, penalties in the future. So definitely scaling without structure, these small errors can turn into large penalties, and knowing and kind of understanding and getting it all right is a big concept. And I mean, I'll always encourage anybody that's looking for, tax advice to go to an expert and to talk to a, tax expert. Your real estate commission should be able to point you in the right direction. Accounting firms should be able to help you. But in general, we do have a lot of, feedback and experience now with tax handling. And so we're here to offer kind of some of the feedback that we've learned and some of the best practices that we learned. But always, just know that there are people out there that are experts on this as well. Vishal being and his team being one of them, but also tax authorities out there that can really point you in the right direction. I will hand it over now to dive into the main content. And I'll do that. I'll pose a question actually to everybody. I mean, like, I mean, I don't think you can interact with the chat in here, so it's a bit of a rhetorical question more, I guess. But who's had a stressful tax season in the last 2 years? And I think Vishal, like knowing that you have so many clients that you're working with, dealing with taxes, this is almost a question for you as well. Like, what does chaos look like in tax season? What does create a stressful tax season? I think that will kick off the rest of the content quite well.
Totally. We see this constantly with operators who reach out to us during tax season. Even before the tax season hits, you can really tell that it's not going to be a smooth ride by just seeing how the operation is set up. The three things that should be connected are living in three completely separate places. For example, lodging taxes is typically it's a spreadsheet or it's being handled by a bookkeeper who may or may not know short-term rentals as well, right? The owner financials or the owner statements are sitting in the PMS and somebody pulls them manually at the end of the month. And the operator's P&L lives with an accountant who's probably looking at it once in 6 months. Meanwhile, the bookings are happening every day and nothing is talking to anything else. And that's what causes the chaos. But how does it feel like? Most property managers, when they reach out, they're confused, frustrated, overwhelmed, and sometimes all three at once. And what most property managers or operators don't realize is what is the real cost, or what is the actual cost of this issue until it's too late. The one big thing is around owner's trust, right? Owners can stop trusting you if your 1099 that you deliver to them doesn't match with your year-end statements, right? The year-end statements 1099 don't tie out. There are lots of questions raised, and that's where trust can break down. Second, back taxes. Back taxes that show up as a surprise because nobody was tracking in real time. And finally, penalties. This is one of the things that stings the most because all those penalties come out of your margin as a property manager, not from your owners, right? The good news is that every single one of these is a system problem. It's not a you problem, right? And systems can be fixed, processes can be built, and that's what the rest of this session is going to be about. That if you didn't build a great process for the last year close, this is a great time to build a process for next year, right? And hopefully some of that is going to come out as we go into this conversation in deeper. But before we get into how we fix the problem, let's understand exactly why it is so complicated. Because until you see this clearly, any solution is going to feel like guesswork. So the first thing we need to recognize is every time you take on a new booking, any single booking, it creates three separate financial events and three separate tax liabilities at the same moment. Not one, but three. And most operators are managing maybe one of them well, right? So let's start with the first, the lodging tax obligation. This is the one that gets people in trouble most often because it feels invisible until it isn't. You may know it as occupancy tax, transient occupancy tax, hotel tax, short-term rental tax, sales tax, depending upon what it's called in your market. The name changes, but the obligation doesn't. The money was never yours. The moment a guest pays, a portion of what they paid is already owed to a government authority. It could be a city, a county, or a state. And it needs to be calculated correctly. It needs to be held in a separate account and paid to the right jurisdiction by the right deadline. It should never touch your operating account. We are going to be spending a lot of time on this one specifically because it's one of the high risks obligations for your business and the one with the most landmines. So that's the first financial event tax obligation. The second is a owner financial event. Every single booking generates data that eventually becomes part of your owner's year-end financial picture. Their monthly statements, their year-end statements, and their 1099. These are the inputs their CPA uses to file their Schedule E, that's the tax form of rental income. If your books are clean and your statements are accurate, their CPA has what they need and your owner trusts you. If your books are messy, their CPA gets messy numbers and calls them with questions, right? And this erodes owner trust faster than almost anything in this business. You're not just doing accounting, you're managing a trust relationship with every owner every month. And finally, the third one is an operating revenue and expense, which creates a tax liability for the property manager. This is your business, your management fee that's earned on every booking, your cleaning margin that is recognized, your pass-through costs that are logged. And this is what feeds your own profit and loss statement, your own Schedule C, and your own tax filing. This is how you know whether your business is actually profitable or it's just busy. So here's the line I want you to remember. If any of these three are mishandled, the penalty always lands on you as a property manager. And we're going to show you why this happens in the next slide. So this is a table that is most important. It's a most important reference slide in this PowerPoint. Let's go through this row by row. Let's start with lodging taxes or tourism taxes. In most jurisdictions, this is entirely the property manager's obligation. You collect the correct amount on every booking. You hold it separately. You pay it to the right authority by the filing deadline. You track which platforms are remitting directly, which is just a fancy word of paying, in which markets that they and what type of taxes are they remitting directly, and you have to confirm that every month. Your owner has almost no obligation here in most cases, which means when something goes wrong, so whether it was a wrong rate, a missed filing, a wrong jurisdiction, it lands on you. The one nuance worth noting, in some markets, the owner is considered the operator of record, which means your liability in those cases is more contractual than statutory. That distinction does matter, and you should confirm in with your local counsel in your key markets. But in practice, you're always first in line when it comes to the liability for lodging taxes. The second one, let's talk about owner net income. This, the responsibility or liability is shared but unevenly. You, as a property manager, are responsible for delivering accurate monthly statements and a clean year-end package and 1099s to every owner. Um, and your owner is responsible, along with their CPA, to look at those documents and then file their own Schedule E. But here's the critical nuance. If your statements are wrong, you bear the consequences relationally and also legally, even though their CPA is the one who's filing their return. Owners will blame you, and in some cases, they have legal recourse against you. The accuracy of what you hand them is entirely your responsibility. And that's why I say that the liability falls largely on you. And finally, operator income. This one is simple. It's entirely yours. Your Schedule C, your CPA, your obligation. There's no owner involvement here. Nobody's going to catch your mistakes here except you and your accountant. So the bottom line of this table is when something goes wrong, the property manager is always first in line, and we often see operators avoid it by just paying for it out of their own pocket, right? So this is something for you to reflect upon, and why the liability for all these tax obligations lie on you. Now let's talk about now that we know what can go wrong and who pays for it, let's talk about what the right system actually looks like, because this is the part that changes everything. Think about what happens in a chaotic operation. The moment a booking comes in, nothing really happens. The booking sits in a PMS, someone pulls a report at the end of the month, they try to figure out what the lodging tax was, they check a spreadsheet to see if the rate was right, they manually calculate the owner payment, they email the accountant. The accountant asks us few questions. By the time everyone has a clear picture of what's going on and what the booking meant financially, weeks have gone by, right? And now you have months worth of booking data that have already piled up. That is the chaos, and you've seen in the previous slides. And it happens one booking at a time every single day. Now, here's what a clean system looks like. A moment a booking is made, your system already knows three things: exactly what tax is owed on that stay, what the owner's estimated payout is, and what the operator's margin or percentage of the revenue that the operator gets to keep. Not in month end, not even when your accountant is asking, at the moment of booking. That obligation is captured, categorized, and visible immediately. Now, when the payout arrives from Airbnb or VRBO or your direct booking channel, the funds are automatically separated without anyone touching them. The lodging tax portion moves to a dedicated liability account. The owner funds are tracked and staged for disbursement, and the operator revenue is logged and matched against the original booking record. Everything ties out, nothing is missing, nobody is scrambling. The result is that your month-end close is not a project, it's a confirmation. You're not building the picture, you're verifying a picture that already exists. Your trust account reconciliation takes minutes, not days. Your owner statements go out in time because the data is already clean, and your lodging tax remittance is accurately because it's also been tracked at a booking level from day one. Now, the reason why most operators don't look like this is simple. They are either running tools that are not purpose-built for solving this financial management issue. They're using general accounting tools that don't understand the difference between lodging tax liability and operator revenue. The other big reason is they lack the expertise. So let's start with the technology gap. That's the gap that a purpose-built technology closes. For example, clearing connects directly to your OTAs, captures every booking automatically across all your channels, separates the funds at payout, and produces reports that your accountants and your owners can actually use without having to explain them. There's no manual entry required, no reconciliation surprises, no month-end fire drill, right? So it's always important to understand if you have the right technology. The technology alone, however, is not enough. The system is only as good as how it is configured and how it's managed. That's where the expertise comes in. The rates have to be right. The jurisdictions for tax have to be mapped correctly. The workflows have to be maintained as the rules change, and the rules change more than you can imagine. And that's what the expert makes, that who makes the technology work. And that's what exactly we're going to talk to you about in the next slide as we talk about the combination of technology and expertise. So with that, I'll hand off to Corey to talk a little bit about the tech side.
Yeah, absolutely. I mean, I'll draw from, all the conversations I've had with so many property management companies now over the last 4 years. But simply put, I mean, if you're not reconciling your revenue and you don't have a strong way to reconcile a booking, that leads to one of the bigger risks when it comes to tax liability in general, because I mean, a booking revenue is only as good as what lands in the bank account at the end of the day. So, I mean, oftentimes there's, a booking in your PMS that says, hey, you're going to get this much money, and then there's, a certain amount that gets deposited. And if there's discrepancies between this, sometimes people overstate their revenue, which can lead to overstating certain tax liabilities, especially in scenarios where the issue is not necessarily coming from like a hosting fee or from a channel commission that's taken off. But still, I mean, those do impact the net revenue that you're actually receiving from that booking, to be able to actually understand what tax percentage you need to calculate off of these different revenues. And I also learn a lot about a lot of people that have struggles with like which fees do I need to actually include in my tax calculation when I'm dealing with percentages. And I think Vishal can talk a little bit about that too. And then there's also scenarios where people PMSs present data for taxes as one line item, and there's multiple taxes related to the different authorities or different jurisdictional taxes that you have to pay that you need to break down into the different percentages on your own, and that creates a bit of a challenge. I was speaking to a 170 property count property manager yesterday with one of the major PMSs that's kind of leading the space right now, and this is a major problem for them. They can't get automation there. It's a manual process, and they basically don't really know what they need to remit to multiple different taxes in a state that has a lot more taxes than other places. So these are all kind of things that, technology can help solve, because if rule sets are created that allow you to do more than just like a this is how we're going to handle it with a very simple type of split. You can create layers of rules on top of each other that build a flow into your process for actually breaking down those funds into how it should be presented, so that when you do run your reporting and the bookkeeping is completed, you have a very easy report that pulls out, this is how much needs to go to each of our different taxes, or this is how much each of our owners 1099 should claim. And those rule sets can really help you create automation in your end of month process. And so, end of month process extends to that yearly thing we'll talk about a little as well, where if you're keeping up with it throughout the year, month over month, you get to this point where end of year and the tax requirements at the end of the year become much more simpler to answer. And so, clearing in general, if you're on this webinar, a lot of you probably are already using clearing. If you're not using clearing yet and you're in a conversation with us, that's great. If you're just curious and you're trying to learn from some of the different tools out there, this is also totally fine. But we automatically will capture that booking across different streams, and we reconcile in a three-way fashion between the property management software, your OTA data, and then also your bank accounts, to be able to actually confirm the amounts that actually land in the bank account. Um, there's no manual entry unless you're in a place unless you're using a bank that essentially doesn't connect to the system, which is very rare in the US. Some of our international clients will upload the manual CSV of the bank transactions to get that reconciliation figured out, and it takes a couple of minutes. But I mean, in general, if you're in a state that we're fully or if you're in a location that we fully support, like the US or Canada, for full automation, and you are integratable with Plaid, which is the third-party aggregator for bank accounts, then there shouldn't be any manual entry in this process. You should basically be able to create full automation there. There's also, that leads to no reconciliation surprises. Really what to look for is, and these are kind of the things I just talked about, but connects to your OTA directly. So if you're using a technology, whether it's clearing or not, connecting to OTAs and pulling data, being able to pull data directly out of the OTA is really important, but also being able to connect to the PMS that you use is obviously important, and the bank accounts that you use also important. You want to be able to make sure that they can separate funds, and I think this extends to more so have strong rule sets that are able to be scaled across multiple different bookings within a few clicks and run across any date range, and create flows, kind of like you see in the app if you're using the app, where you can systematically, based off the different assets or different locations or different, group of assets, you can create different flows for how you're going to handle that calculation to get down to the tax level. And then also just make sure that you can produce reports that others can act on. Bring in and engage with your bookkeeper or accounting team that you're currently using, into the demos and into the training sessions. They're going to be the ones that need to get the information at the end of the day. If you're not, wanting to do this, you're kind of wanting to be hands off, you can always work with an expert like Host Allies, or if you have somebody in house or you have somebody that you're already working with, oftentimes they can pick this stuff up pretty quickly. And so definitely, feel free to engage with us if you're not already a client, but also if you are, we have we just started kicking off and launching our customer success management team, which is led by actually a client of ours. It was one of our first clients. They actually joined our team because they were such fans of the software that helped kind of change their infrastructure altogether. And they managed around 80 properties, and now they're leading our customer success. So really strong person to be able to help you kind of learn more. But then if you do want to engage with experts further, there's people like Vishal out there. One thing I forgot to mention at the beginning, I'll do this before we switch to the expert side of things, is just we do have a question and answer session available. So if you do have questions, this is a lot of good content. I mean, what that chart that Vishal laid out, that's a hopefully took a screenshot of that or something, because it really shows you the onus, and who the onus lies on. So if you do have questions about any of this, though, feel free to reach out through that Q&A, and then now I'll switch to Vishal to take over.
Yeah, I would just add like the technology is really important. You want to use purpose-built technology that is designed to solve the problem. We just talked about the need, but we also need you would be careful about who you're using to set this up. You absolutely want the expert, somebody who understands, be able to separate a general accountant from a good short-term rental accountant, somebody who understands what the data actually means
That's a great
and what
call out.
to.
That's a
Good.
great call out. And I just say as well, like one thing that I hear about so often is we have 2 to 3 different businesses and we use the same accountant for each of them. And the accountant has zero understanding of short-term rentals. And I'll talk to them at the beginning of the year and we'll have this conversation. They'll be like, yeah, we're interested. I think our accountant's doing this okay with their spreadsheets and their QuickBooks Online or whatever. And then it's almost like clockwork. At the end of the year, they're coming back to us and they're saying, hey, we don't know what we're doing. We need to change a bunch of things and we need to set up better infrastructure. So we see this seasonality through the last 4 years, and it's something that, you can get ahead of by working with somebody that's actually an expert in this space, because this space is more complex than generic business.
Great. So when the tech and the expertise work together, the outcomes on the right side are very much achievable. Tax season, and they're not just aspirational. Tax season becomes a report and not a project. The owners get their statements, the CPAs can use without a follow-up call, and you know what you owe before it's actually due. And every jurisdiction gets filed every period. That's what the system is supposed to feel like. And I think that's what we're kind of encouraging you to think about. Um, the next topic, which I would really want to talk a little bit deeper on, is lodging taxes. It's one of those obligations that makes short-term rental accounting fun. Uh, and this is the slide where I wish every operator had seen before they got their first surprise bill. So, what are the landmines? First of all, the rules change at a local level, not just at a state level. You can be fully compliant at the state level and still be non-compliant in your city or county. There are separate taxing authorities with separate tax rates, separate deadlines, separate filing requirements. And what is true in one zip code is not true in the next. And that is just the nature of the beast, right? The rule changes can be retroactive, immediate, or come with advance notice. You won't always get a warning. We've seen jurisdictions change rates with no advance notice, and operators suddenly are under collecting on every booking going back months. And the shortfall generally comes out of your pocket. Platform remittance is not guaranteed. Airbnb collects in some markets, but not all. Airbnb collects some sort of taxes, but not all. And when and where they do collect, partial remittance is common. So you cannot assume the platform handle it. You have to confirm it every month in every market. Um, VCAs or what is called voluntary collection agreements are specific risk areas most operators don't know about. Some jurisdictions have these voluntary collection agreements with platforms like Airbnb, um, that the that fully shift the lodging tax obligation to the platform. But if you're one of those markets and you're remitting independently, you may be paying twice. So you need to always confirm the VCA status before remitting in any of these markets. Filing frequencies and thresholds vary by jurisdiction, and it's based on revenue. Some want monthly filings, others want quarterly, and the revenue threshold that triggers a filing requirement also varies. You need a tracker for this, not a memory. And we'll talk a little bit about that as a best practice in the next slide. Um, but the best way to stay on top of things is to go directly to your local tax or revenue office. And most allow you to set up email alerts so that if there are any rule changes, you're automatically getting notified. So that's something to think about on how you navigate some of these line mines. But we talk about three common mistakes people make and what are some of the three best practices. So, mistake number one, leaving lodging taxes commingled with owner funds in trust. The money arrives in the trust correctly, and that's expected. The problem is when they stay mixed with owner funds. When it isn't separated, you lose visibility into what you owe, and then reconciliation becomes a nightmare. And you risk dispersing money that was meant for taxes, maybe to your owners, that you should never have dispersed. So instead of doing that, you should do this instead. The moment you reconcile a payout, move the lodging tax portion to its own dedicated liability account, not operating, not trust, its own account. That money is not yours, and your book should never make it feel like it is, right? That's mistake number one. Mistake number two, the wrong tax rate is configured in your PMS. As you know, and Corey talked about it, the PMS controls the tax rate that the channels will collect for each reservation. When the incorrect number is baked into your system, it's collecting the wrong on every single booking automatically. And if it's collecting too little, that means you're covering the shortfall out of your own pocket when it comes to filing for those taxes, right? And when a guest disputes a charge, sometimes what happens is somebody goes and adjusts a number in the PMS to resolve that dispute. And that correction often breaks the tax calculation downstream for every future booking on that property. One guest dispute can become a portfolio-wide compliance problem. You need to avoid this by starting at onboarding. When onboarding a new property, confirm the tax setup before the first booking goes live. Get the owner's tax ID, confirm the exact rate with the local authority, know who's remitting, you or the platform. After the first booking, it's already too late. So that's the second mistake to avoid. And mistake number three, many of you may not have a jurisdiction tracker, but that's one of the best practices we recommend, that you build a jurisdiction tracker where you understand all your properties, which jurisdictions they fall in, and what is the act. There are certain things you need to track, right? But the one thing that people do is they set it up once in the first year and they forget about it, right? But that's also not a good thing. This jurisdiction tracker needs to be a living document. The rules change, the platform remittance agreements change, local ordinances pass with little or no notice. The operators who built their tracker in year one and assumed it's still accurate in year three is the one who gets the retroactive bill that they weren't expecting. Instead, you should keep a jurisdiction tracker that documents the rate, the filing frequency, who remits, the last confirmed date, and review that every quarter without exception. This is a compliance asset, not a setup task. If you don't have one, building this one is probably the single most valuable hour you will spend on your tax compliance this year. So that's some of the three best practices on lodging taxes. And I wanted to come back to cover this really important topic. Let's go back to the overall tax rhythm, because lodging tax is just one portion of the money owed to Uncle Sam. This checklist is an operating rhythm that separates operators who are in control from operators who are always playing catch up. So there's a monthly aspect of this, there's a quarterly, and there's a year-end aspect of it. So what are the things we ask you to do every month? We want you to run your lodging tax collected versus remitted report. Confirm all the platform remittances for every market you're operating. Deliver owner statements, reconcile trust account, make sure all billable expenses are charged to owners. If you're not doing all of these things every month, you're accumulating problems that will surface in the quarters and the years. In the quarters, you want to review the jurisdiction rules, changes in your market, confirm that your 1099 tracking is current. And if your business is actually profitable based on your financials and you owe more than $1,000 federally for the year, make your estimated tax payments. Missing estimated payments can result in underpayment penalties even if you pay everything at the year end, right? And finally, at the year end, you want to make sure that your 1099s are issued to every owner and every vendor. Deliver a complete year-end financial package to each owner along with the 1099. Confirm all the lodging taxes are closed for every jurisdiction. And then you can hand off your CPA a clean profit and loss statement with Schedule C inputs ready to go. If you have been running the monthly and quarterly rhythm, and if you start running the monthly and the quarterly rhythm consistently, year end is going to be a 2 hour exercise. And if you don't do that, then it's going to be a fire drill every time. So this is some of the best practices of how to think about holistically taxed during the entire course of the year. And I wanted to end with two case studies to show you that very quickly a company that's not doing some certain things really well can get to a great point, right? So had this client in Virginia Beach, and they asked us to help them with their lodging taxes and year-end filings. So before we started, they did it in-house, and there were some various integration challenges. They were making some mistakes. Tax was a big pain point, and they were 2 quarters behind on tax filings, even to a point where they got blocked from filing online, and they had to go show up at the jurisdiction to get their filing started. When we started with them, we helped them reset their entire accounting and financial system and ensured that they are configuring their trust accounting, clearing effectively, and designed that process to go with the system. We took over their taxes immediately and spent a lot of time going through their back taxes and what they owed and how much they had filed, got those filings corrected and got them caught up. And then we started working with the local tax agency to kind of recoup or adjust for certain overpayments of taxes that they had made. And now we are running a monthly lodging tax process that works, and the taxes are delivered on a timely manner every month, and the client has caught up. So more than the hours we've saved them, it's the chaos and the stress that we remove. And then the client believes and has the confidence knowing things that are getting handled in a timely and accurately manner. And this didn't take like a year. This took a few months to go from a really bad situation to a very comfortable situation. Another example of a case study was a California client, and they had a messy financial accounts and messy trust accounts, and they had not done any prep work for delivering 1099s for owners and vendors. And basically, the data was a mess. So what we did is we first got involved and took all the right extensions so we could protect them from liability, right? Then we created checklists around W-9 information for owners and vendors. And we systematically went through, and it took us 3 or 4 weeks to collect all of that information. We also used a tax software that allowed us to go test if the right social security numbers match with the right names. So we were not making any errors. So we would make sure we were paying the right people, right? And then we had to go scrub their financials, and we had to scrub their owner statements to truly understand what they owed or what they should be declaring as income for these vendors and owners. This again took us a month of scrubbing and a lot of rework, but we were able to help the client close on their books effectively and avoid penalties. And this happened with a client that didn't have very good data to begin with. Their data was a real mess. So if this should give you hope that even if you have a situation like this, or somebody you know has a situation like this can be addressed with some diligent work. Um, with that, I'd love to just end on a note that we covered today, the three obligations we talked about, who owns the risk, the lodging tax line mines, the year-round rhythm. This is a foundation of what Host Allies builds, and we manage for our clients every day. And you don't have to be a person figuring out which jurisdictions have VCAs, how to build a tracker. You don't have to run all the monthly reconciliations or chase the 1099 at the year of the end. We can help you do it, or at least help you get started if you're not doing it in a more structured manner. And so if you want to see what that looks like for your specific operation, definitely email us at hello@hostallies.com and mention this webinar. We would be happy to set up a free consulting session for you to understand what your specific situation is, maybe give you some sort of a roadmap to work through this, or maybe even offer up to help if you need help in the long term. So with that, I will hand off to Corey, who's going to talk about how clearing can help you with your needs in this scenario.
Yeah, I mean, I think Vishal, you gave such a good kind of overview of how technology and experts work together to make this easier. I think more so here, I'll talk more about, just some of the takeaways I had from the session when we were going through it and kind of we were talking about how we were going to go through it and whatnot. And I think a nice little checklist almost for the next steps following this call. And I think like the first thing would be start with what matters most. Track your tax collected, money owed from each booking, and work with an expert if it's not something that you want to be doing. I mean, it's there's ways to make this a lot easier for yourself. Using the right system to do the job goes to the tech. So if you're starting with what matters most, then make sure you use the right tools for the jobs. Because even if you're focused on what matters most and you don't have the right tools for the job, you're going to run into a scenario where you're doing things wrong. So, clearing obviously is for trust and tax liability tracking. It's really the property level financials that we're looking at, and then QBO and your CPA are really on the corporate level, and these need to communicate and they need to have, synchronicity between the two and a two-way sync to be able to understand the full picture of your business. Build a year-round process. That's what we just talked about, and I think that's probably the biggest takeaway is if you want your life to be easier at the end of the year, start today and make it easier every month, and that will turn into easier at the end of the year. Working with the right partners, whether that's us, host allies, or people that you trust and already work with. I mean, at the end of the day, just make sure that it's a good fit and make sure that they're actually focused on this part of the industry and this vertical in general. And take action now. I mean, now is a great time. You probably just got through tax season or you're just getting through tax season and you have all that insight in your head about what went right and what went wrong and what you need to fix. And that's really a good time to, right before summer, sit down and figure out how you're going to make this easier heading into summer if you're in a seasonal market where, summer starts to become a little bit of a chaotic mess in and of itself in other areas of your operation. So, clearing's here to help. We're always willing to listen. We love feedback. We love being able to support our clients. If you haven't seen a demo and you're looking for a demo, feel free to go to www.getclearing.co and /demo. You'll be able to sign up for a session and we can jump into a call and dive deeper into this topic in general. As I mentioned, there will be a survey that goes out after this session, so please take that last minute just to fill that out for us. It's going to help us get better over time. And otherwise, yeah, I see a couple questions as well. So we'll go into questions now and we can jump into those. Otherwise, if you don't have any questions, feel free to drop. If you want to listen to the questions, totally fine. Um, the question that just came up is where can we find a replay of the webinar? So there will be a link that gets sent in an email after this that will go to you with a link to our YouTube channel. It will be hosted on YouTube. If you go to Get Clearing, then you will be able to see this webinar and all of our previous webinars. So definitely a place to go look there. Another question that's come in is, okay, this one's actually quite interesting, Vishal. If you're brand new to property management and you didn't actually have to go through much from a tax filing last year, you're now new to property management and you're starting in 2026. What's your biggest piece of advice for 1099s for your owners, and how can I start really preparing for those today?
Yeah, I think I'll think about this in three different aspects, right? Number one, you do need to collect all the W-9 information for your owners and vendors, right? Because if you don't have all that stuff handy and you don't have that stored, sometimes we have situations where you paid a vendor, for example, and then they disappear and you don't have the W-9 information, so you cannot file a 1099, right? So get that information collected and stored properly, your W-9 information. Second thing, understand the tax status of all the different people. Tax status could be different for your owners. They may be not, they may be LLCs, they may be partnerships, they may be sole proprietorships, and also for your vendors. You might have certain vendors who are corporations and they don't require 1099s, for example, right? So understanding the tax status of all the different constituents is important. This will allow you to be prepared for this year's filing when the time comes to file 1099s, right? And you're not scrambling for this information. That's a one piece of information, a validated information stored somewhere that's secure, that doesn't get hacked into something. Second part about this is making sure that your date, like we discussed, like making sure that your system that you have set up is correctly calculating all of the components to generate your 1099 and your year-end statement correctly. Because in the 1099, typically you report a certain number, which is your gross income, and then there are certain other costs that you may show up on your year-end statement that can be deducted from a tax perspective. So making sure that those two things jive and they are set up in a way that they jive and the numbers make sense earlier on is going to be great for you to have a good end of year 2026. If that was I think that was the question, Corey. So those things I would do from a 1099 perspective, for sure.
Yeah, awesome. Um, Thanks for that, Vishal. There's another question here. It says, we already work with clearing for around 2 years. We love it. Is there additional help from your side to help us maximize using it? So, do you have any clients or that you've worked with before that have been clearing customers and have decided, hey, I want to give it, I want an expert to help me take it to the next level? They say they're probably using around 50% of the platform, so they're wondering if like you support those types of services as well.
Absolutely. Yeah. We've had scenarios where somebody set the system up, they started using it, and now they've grown to a certain point. They want to make sure that they're utilizing all of the functionality. And if you see some of our prior webinars where with Corey and me, we've talked about how you can set up the system in an optimal manner to do automated expense management, setting up your financials, whether it's QuickBooks or another software, integrating. So Hostalyze practices something called integrated financial management, where revenue recognition, expense management, and asset and liability reporting are done in an integrated manner between your trust accounting system and your financial accounting system. So we absolutely can help you save a lot of time and maybe get a little bit higher accuracy in some of these things if you implement some of our processes. So feel free to reach out and we can do an audit of how you're set up and give you some perspectives around what we could do differently to make your life easier and your financials more accurate.
Awesome. Do you want to go back one slide for a second, Vishal?
Sure.
Or one more, please? Yeah, we'll just put this up again here because if you're looking for an email to send a message there, I mean, you can by all means reach out to me if you have me in your inbox, but definitely connect with this email here. Mention you were on the webinar, and I think that's a good next step for people. And then I think we're closing off now. There's 2 more minutes left, but in general, Vishal, what would be your takeaway advice for somebody that is struggling with tax season? Where can they go to get more information about taxes in general, and then also how can they get a hold of you?
Yeah, so I think the best way to reach out to me would be hello@hostallies.com. Everything that we've talked about is generic here, right? But it could be unique for your own situation, whoever the property manager is, depending upon your location. So I would schedule a call and we can go through how some of these things apply to you and where we can help more. Again, go back and see the YouTube video. But more importantly, I want to make sure that this is the right time to put in a process so that you're much better set up for next year's tax season, right? And it's not in December, it's not in November, it's not in January of next year, it's now. And so this framework that you see out here, revenue recognition, expense management, and trust liability accounting, these are components of your trust accounting and financial accounting system. We would love to help you understand all of these. And all of these have an impact on what your tax 1099s, your lodging taxes, as well as your income tax preparedness would look like. So would love to help in and get more details on this. So reach out to me. Looking forward.
Awesome. Well, thank you again, Vishal. Always a pleasure. And I really enjoy working with you. So thanks for joining this session here and offering these fine folks some advice on how to make their tax season a little bit easier. If anybody wants to talk to Vishal, the email's there again. If you do want to reach out to me, feel free to at Corey@getclearing.co. But otherwise, we hope to see you at the next session, and we hope that you'll fill out that short survey at the end as well. So thank you very much for your time today, and we look forward to continuing to work together. Have a great day.
Thank you, everyone. Thank you, Corey.
Yeah, bye now.